All right, let's talk about effort versus result, and specifically the synchronicity. So what is it, the synchronicity, the concept of the synchronicity? Not necessarily, an original concept from the Wyckoff Trading course that he created himself or from the SMI. This is something that came out of the WTC. And in a way, it's kind of like an ease of movement in the direction of the effort. So usually when we talk about the ease of movement, we usually would say that there is diminished effort characteristic against the result that is expanding. And because the result is expanding, we would say that there is a progression in the direction of the buyers, but the effort is really, really small. So with that small effort, there is an ease of movement as to how price moves and commits to the new highs or new lows. So that would be out of sync. Synchronicity usually is going to be either increasing effort, increasing result, or it's going to be diminishing effort, diminishing result. That's where synchronicity is. And, we would be judging the character of that synchronicity as well. Because synchronicity by itself, if you think about this, why are we thinking about synchronicity? Why is it so important? Well, we want to see that whatever demand that comes in on the rally is capable of producing a significant rally with significant momentum. And when we don't have that, that means that there is some availability of the supply on this rally. And that's why we might have like larger reactions, stopping actions, and so on and so forth. All right, well, let's look at this example. And this is an exercise by itself. So it works as a bias exercise. So we have to figure out what the bias is. And hopefully I'm going to have a volunteer today. So please say yes. I want you to go through the chart and kind of give us an idea of the bias that you might have here. And then we'll talk about the synchronicity and specifically how that synchronicity starts to develop. So let me know, guys. Anyone wants to step in, volunteer, say yes. All right, let's go to Dimitri. Hi, Dimitri. How you doing?
Hey, can you hear me?
Yes. All right, great. So I'm going to ask you a general question first, and I want you to give me your first impression. And then we're going to go into more detailed analysis. So my first question to you is, what do you think the bias of this chart is? Give me
Let's
your
see.
first impression. It doesn't really matter.
Of the entire chart,
Well, what is your bias on the last bar? Like, what do you think is going to be the next significant move, to the upside or to the downside?
I think it will be to the downside.
Okay, so now that we have that general sense, now I want to ask you more detailed questions. So, Dmitry, why don't you tell us the whole story of what you see here as to how do you come up with this bias, the downside bias?
Well, just really quickly, I noticed that we had a reaccumulation range from March to September, and then a markup phase till mid-November. And then here is what I thought is the beginning of distribution. So essentially, the first thing I saw, I mean, if I had to like I had to answer right away. I saw the lower highs towards the end of the range here.
Okay.
So LPS wise, in my mind,
hmm
um, I saw the some sort of upthrust action in mid-February
hmm
or up, yeah, up there, yeah. So like a mini distribution range right there. Now for the volume towards the end, I do see, going from June to, somewhere right like June to like July-ish, I see what it looks like an increase in synchronicity between effort to the downside and result to the downside.
hmm
So I saw that. I also saw that, if you look at the previous swing down from, April, May, or yeah, right there, so I see an increasing spread to the downside. I see increasing volume while those spreads to the downside increase. So all I see here right now is from first reaction is just a synchronicity to the downside.
Okay.
Synchronicity between the effort and the result to the downside.
hmm Could you walk us through, if you think that this is a distribution, could you walk us through the price action and identify the points where the big interests have sold their position, if this is a distribution?
Yeah, I mean, I would say maybe
Where do you think was the first sale, first significant sale?
mid-November, that big volume spike, mid-November, right in the beginning of November, right there. Um, so that's probably, in my opinion, where the CO would be getting out.
Mhm.
Um, but what, and then right before December, right on December, I also see a big spike. I wasn't able to see exactly which bar that is.
Mhm.
No,
The
not
last
a huge,
couple of us,
yeah,
yeah. Mhm.
not a huge change. Not a huge spread for such a high volume.
Mhm.
So that is interesting to note.
Well, and look how it stops here. So what does that suggest, Mitri?
Suggests that some demand came
Yes.
in.
Some demand is here, and that's what stops this price from going further down. Okay. Well, we just want to identify, points of selling. So definitely here. There is some selling on the way down, but it's probably closer to, this being weak hands. Okay, so where's the next selling?
Uh, Sometime in January, I see another high volume bar. Yeah, right there. Probably some event had a gap up. Um,
Mm-hmm.
so that's some liquidation for the CO if this is distribution.
Mm-hmm.
And then also in late February, another large volume spike, and I think that produced a rally down.
Okay.
Yeah.
I would also say probably this bar so that we wouldn't miss it. Look at this.
Yes.
Mm-hmm.
Agreed.
Yeah, so it's like strength they are selling, strength they are selling, strength they are selling. And it's so interesting, talking about synchronicity. Look how synchronicity develops. The first sale does not stop the price from moving further up, but it really deteriorates the quality of the demand. Because on the next push up, we only have a very marginal commitment to the upside and still some supply comes in. So in both cases, demand is going down and supply is going down. Well, what is going to win? Well, in this case, we see that on the way down, supply is increasing and then there is an increase in the downward result. And that's the synchronicity that Dimitri was talking about. Okay, What is the next time when they sold?
Mid-April, I see some selling there.
Okay, yes, definitely around this area right here. So somewhere here. Next one.
Next one, I see two volume spike. Well, I would say uh, the selling from the CO or the institutional trend followers probably later in May. That big, actually the highest volume spike on this chart.
Yeah, definitely into the strength.
Yeah,
They're selling into the strength. We see how it has some demand behind it. It pushes the price even higher, but there is not a lot of buyers after that.
yeah, and it produces that the lower high. So
Probably this bar right here as well has some selling, some synchronicity there. There is some selling here also on the way down, not necessarily at the end of this reaction, but still at the beginning. So we're seeing how there is a top information is being based on the selling by the CO. Okay, well, where else? Let's conclude this. What is the next point of selling?
I see some selling. Well, in hindsight, but I see some selling right in the beginning of June, right there. Yeah.
Yes, okay.
Uh,
And by the
and
way, let me just kind of challenge that statement a little bit. In hindsight, you see some selling. Dimitri, I think that what you see in here is not in hindsight because majority of the people even will not see that the selling has occurred there. Um, so don't worry about that. We are uncovering, not the hindsight. We are uncovering the knowledge in the chart here, so that's totally fine. Okay, so what is the next point where we see the selling?
well, yeah, to your point, Ramon, I actually, if I had gone through the trading range and that last bar was the last bar I saw, and you asked me if that was a buying or selling, I would probably say selling. So I do agree with you. And then, as we go down right after that bar, we can see increase in volume, increase in selling, prices going to the downside, increased spread, and
Okay,
some action.
some demand probably here at the end of this reaction, right?
Right. A little bit of demand. Yeah, maybe some mean
Mhm.
reversion traders.
Okay, and then as the mean reversion trade happens, so we are in the oversold condition here. How would we label this low, Dimitri?
Um, I would say this looks like a major sign of weakness to me.
Okay, and major sign of weakness is always going to be associated for us with that short-term oversold condition,
Mhm.
just because it's a deviation from the mean of the trading range. So therefore, such a strong deviation away from that mean will produce that oversold condition. So some value is going to be found by some institutions. They're going to come into this position. And we see that demand comes in. Okay, Dimitri, let's just finish this. Where is the next sell-in that you see?
Uh, Mid-July, I would say is well. Yeah, that you can. Well, there's a demand tail there, but if the CEO is still trying to get rid of the last portion of his position, I would consider it selling.
Well, and think about the intraday for this bar. Walk us through this intraday action. So from the previous close, what does this
So
bar do?
so it will it opens and then it goes down.
Opens where?
It
At the same
opened.
level of the
Oh
close,
no, it
below,
opened.
above?
Okay, so if the close is there, it's way above. It gaps up.
So we see that gap. Do you guys see this? This tail, comes later. So there is a
Right.
gap first, and then after that, most likely we have sell-in.
Fills. Yeah, selling fills the gap.
Okay, so supply increases, and that's why we're selling. Why is there some selling on this bar? That's why. because on the intraday basis, we're going to have that initial sell-in, and only then the price will recover and close like this.
I see. So it's kind of like, I don't want to say fake demand, but it's not the CEO smart demand there.
And see, the problem here is that this fake demand, this weak hands demand, because of the institutional signature of it, sometimes will look as a strong demand. And obviously this attracts other weak hands. So you need to see what kind of continuation we're going to have here, and obviously that continuation does not have a most bullish character. Okay, well, Dmitry, I think this is a very compelling story here as the way how selling happens. And look how selling happens. It happens into the strength first. Then the next element is going to be synchronicity. This is where they were selling, selling. So selling, selling increases. And then once the selling increases, this is where synchronicity happens. After the initial synchronicity, we have a lot of failures, low highs, as Dimitri has mentioned. So the quality of the rallies is diminishing, whether by the character or by the intention of what needs to be achieved. And then with the increase of the supply signature, there is more synchronicity to the downside. So this seems to be like a very gradual way of how change happens from a very bullish view into a bearish view. And we see how the forces are acting. Stop in action, another stop in action, series of stop in actions. Finally, that stop in action produces synchronicity, deterioration in character, deterioration in the intent, ease of movement to the downside, and so on and so forth. How is this trading range, Dimitri, different than the one that we've seen before here on this chart? Because I see the same increase of the supply. I see the volatility to the downside. What is different?
The synchronicity. So the first thing that pops out on me on the reaccumulation is, at first glance, it looks like the swings down get smaller and smaller in size, while on the distribution, the swings down are getting bigger and bigger in size.
Exactly.
That's just the knee-jerk reaction. First thing I notice.
Yeah, absolutely. This is that effort versus result concept, which is extremely important. And Dimitri is just picking it up here so nicely. We have a diminished result to the downside on the increased effort. So there is a push to the downside. The market participants are trying to sell so that the price would collapse, and it doesn't. And then we could go even into the character of the move, and we could say, yeah, the volatility increased somewhere here, but then look at the next reaction. Such a laborious move to the downside, which suggests that the selling is not that aggressive. And that has been confirmed by the volume signature itself. Where we go into the late stage of that reaction, that actually suggests that some demand is here. And then obviously this acts as a confirmation, and this acts as a point of entry on the way up. And Dimitri, absolutely correct. Look at how volatility increases and the result increases to the downside. This is a different range, a different structure. Okay, well, Dmitry, really good job. Here is the result. This was JCPenney. And let me just go through this really quickly. I want to introduce this concept, and Dmitry, I want to see if you have any questions, because you were talking about the synchronicity and how we could use that. So look into this range right here. What happens first? First bar, we have some selling. This is where a stop in supply comes, right? It's that value supply. So a value investor is going to sell into the strengths of weak hands. And it's very difficult to decipher it right away. we only could make that conclusion that there is some sell-in just based on the spike itself at that time. So we know that the volume has increased. That has an automatic suggestion on the increase of the supply. Then we have to look at the result. And that's the key. We have to have that, logical sequence. What is the result? We're looking for the test. The test was not that bearish at all. So supply has come in and the test was okay. So we're expecting a continuation. All right, so we're continuing with that uptrend, and then again, supply comes. In this case, supply is present, but it definitely diminishes on that bar, as well as demand is diminishing as well. And think about why this happens. Why would both supply and demand diminish on that second bar? Well, it does so because of this bar, because of this original, bar number 0 or bar number 1 here. Why is that? Because on this bar we have both increase of the demand and increase of the supply. So sellers have sold and buyers have bought. And they've established their positions. And once they are in their positions, what are they going to do? They're just going to wait and see what's going to happen. So there is less buying and less selling at the same time on this bar. And that's why that signature goes down. I hope that makes sense. Yet, we see that by the result of this bar, demand still is winning. So kind of like, again, multi-layer thinking here about the character of the demand and supply and the result that happens, even though both are diminishing supply and demand, but still, demand is still winning, suggesting a continuation or at least an attempt. An attempt happens, and then we're seeing how demand deteriorated completely, and then supply comes in. And on that supply, finally, we are not just stopping the price from moving further up. For the first time, we are actually pushing the price down. And that's when synchronicity starts to occur. It's when supply is increasing. It's not like it didn't increase here or here. It did, but it produces a different type of result. This is the first time when the result is to the downside and not just a stopping result like we had here or here or here. Does that make sense, Dmitry?
Yeah.
Okay, so and then we are looking for this type of synchronicity bars. Let's walk, further. So for instance, when we go into, and I think I need to change a couple of bars here. Like when we go into this action right here, let me change this right away. I don't want to confuse you guys. Okay. I think this red bar should be here. Okay, why? Because we see how that supply comes in. So we see how supply comes in, and that's first stop in supply. Demand is resisting and still pushes the price up, but all of these tails in the increase in the volume signature suggest that supply is present. Plus, think about where it happens, right? So if we've had all of this supply coming in at this level, institutional participants are going to be looking into this zone to sell again. And here is that selling into the strength. Then what happens next? The next time there is a push to the upside, there's going to be lesser demand and lesser supply. And here actually there is more supply, so probably not the very best depiction here. But what we're looking for is we're looking for that increase of the effort, and then increase of the result after we had that potential stop in action. So that traffic light always should be value selling, then deterioration of supply and demand, and then synchronicity of effort with the result. And it makes a lot of sense to me, at least from kind of like a physics point of view, because, again, I'm just trying to figure out what would be the best analog, for this type of action. So you guys, tell me. Some kind of two bodies that have different type of mass and velocity. One is uptrend and one is selling that comes into this uptrend. They collide at this point. What happens? Because uptrend has a lot of velocity and momentum, it's still gonna continue its move to the upside. But now this velocity and momentum is gonna decrease. And it's not gonna be the same. Because the effort that was spent on pushing this bar has been, out in the world right there. And these buyers are not necessarily going to be buying on this bar. So there's going to be a deterioration of the buying after such a big effort. At the same time, sellers have produced the same action. They've exuded their effort to stop the price. It didn't stop, but it doesn't move anymore the same way. Yet the sellers are in their own way exhausted, deteriorated at this point. And they are waiting for the price, to start crumbling. And when more selling comes, that's when we see this type of action. Actually, this bar right here probably suggested that that's what we're going to have here. Okay, well, let's see if we could have that type of confirmation again. And by the way, what do we have after we have that synchronicity? Ease of movement. Because once the effort increased and the result increased, after that, demand is exhausted and the price could move to the downside with less supply. So for instance, on this bar right here, we could see how the supply signature actually diminishes relative to the synchronicity bar. So there is an ease of movement to the downside just because of what preceded it. How supply has emerged, stopped the uptrend, then showed synchronicity, and then it doesn't require additional selling. And the price just goes down. And we could see how the price goes down and the volume goes down, and that by itself suggests deterioration of selling and suggests some kind of rally. Okay, let's look at this again. So we see in value selling, asynchronicity, increase of synchronicity, ease of movement. Look again how supply diminishes relative to the effort that came off the top, and the price moves easily to the downside. Let's look at this again. Value selling into the strength of the weak hands. Another attempt to go up. In this case, very clearly, both demand and supply are exhausted. Synchronicity, where effort increases, and then the result follows. And then after that, supply decreases, but yet we're still going down. Same pattern, repeats over and over again, right? Let's look at this again. So Dimitri was going through this bar right here, saying that, on the intraday basis, we looked at this, there was some selling. Okay, then selling and buying are exhausted, actually in this whole area right here. And then as selling increases, we see that bar that moves to the downside now more easily. And then when selling starts to decrease and the price still moves, that's an ease of movement. By itself, if you think about this as a concept, as a system, you could create a swing reversal system out of that. If you keep noticing those type of bars. So if you could identify those type of bars, so for instance, here we could, at the beginning at phase A, we would see kind of like the same type of picture, right? So we could see this, maybe, okay, so this bar, then this bar, something like this. So all of those, in all of these instances, this pattern of how first supply stops the movement, then it exhausts the demand and supply, then there is a synchronicity to the downside, then there is an ease of movement. Every time happens this way. Think also about synchronicity in different terms. Think about the synchronicity in terms of the phases that you might have. So here we are identifying this as a reaccumulation pattern. Which is followed by the rally, and then we have a small distributional range right here. Then we have a change of character, and then the distributional pattern starts. For the first time, there is synchronicity to the downside, failure of the rallies for the first time with the lower highs, and then our potential phase C, phase D. I would probably put phase A here, phase B. Now think about the traffic light that I'm showing you here, and think about all of these elements. The first phase, with its intention to stop the price from moving further up, means that there is some selling into climactic run. And that's a value selling. Okay, so we see that in this area right here. We see this in this area right here. Then what do we have? We have a presence of the supply. We have but it's less. And we have diminishing demand as well. So in both cases, both efforts are going to be diminished. They're just exhausted by this war. They're exhausted by this collision that has opposite energy, on both sides, and it's just going to be kind of like a blur. Nothing's going to happen. There's going to be failures on the upside. There's going to be failures on the downside. And then suddenly after phase C, this is where synchronicity is going to pick up. This is where usually going into the major sign of weakness, we're going to see an increase in the volume signature. So effort is increasing. And then on the major sign of weakness, we're going to have an increase in the result as well. So it's that third step where effort to the downside increases, supply increasing, and demand is starting to decrease. Synchronicity happens. And then after that, phase E is going to be an ease of movement. Phase E does not require a lot of volume signature. This is where the price could just move easily. You could think about the synchronicity in terms of the phases as well. All right, Dmitry, questions, comments?
Oh man, the whole time you were explaining this, I was loving the physics parallel. I was just thinking about, if you throw a ball into the air really strong, the ball will go up, but it doesn't stop right away. The velocity slowly starts to, decrease. Okay. Gravity hits it.
This is great.
Right? Gravity's pushing down, so it's kind of like the phases here. It's the supply is like the gravity.
Excellent, excellent. So with my content team, I was discussing this concept because we were thinking about what are the easier analogs for us to use in classes in order for us, to teach this concept better. A cannonball, right? Or what Dmitry has said, also just throwing the ball, right, would have the same type of mechanics where initially the momentum is going to accelerate to a certain point, then there's going to be a deterioration of the momentum, and then the slope is going to start changing, right? So we kind of in this change of behavior, then we are in the distributional pattern, then we are in the emergent downtrend, and then we are in the markup. And please note that in the markup, there's going to be acceleration to the downside at the end where the ball is going to fall. This is going to be physics at its best because the gravity and, depending on the mass is going to define, the increase of velocity and increase of the momentum before it hits the ground. So all of the physics here work in this price cycle. So I had an idea, the idea just to look into the physics or the mechanics or the math of the ball throwing or like a cannonball. So if somebody knows, that math, please let me know. Let's look into this. I'm very curious about that. Eric is saying here, I'm thinking of a spacecraft with a thruster after demand and a thruster for, AFT, demand, and a thruster for supply. Volume is fuel, result is price movement. This could be, it's probably a little bit more complicated, Eric, in terms of, how to explain this to people, but I see where you're going with that. I think the analogy of how we throw the ball, the specific trajectory, the force that we're applying that resolves into momentum increase initially, and identifying where momentum actually stops. Those are crucial things in identification of the final effect that we could have. Yeah, so Dimitri, if you can come up with, something, like formulas for that, that would be very interesting.
Yeah, velocity equals mass times acceleration, right? I'm sure there's something we could do with that here.
Yeah, yeah, something like that. And I would even say I'm going to show you guys there is really nothing for me, to hide here. If somebody could, produce this for us, that would be even good. For instance, when we look into the first initial throw of the ball, let's call it this way, right? So here where it starts, and look at the momentum, the strength with which the ball is being thrown. This. How much did we travel? Okay, well, we traveled this much. Next throw, this. So there is a little bit more momentum here. And that's how we would be looking at this. And we're probably looking at this and we're comparing it to each other. But I wonder if, we could measure the momentum and measure the result and measure also the effort behind it. So effort, momentum, result, and somehow make a projection as to where the price is going to lose that momentum. So for instance, at this point of time, there's going to be a loss of momentum, like at $8. So anything above $8 is of no interest to us once these two rallies have happened. So that's kind of like an idea, to develop, looking at how initial push could sustain the trend. All right. Well, Dmitry, anything else? Any last thoughts?
No, I love that idea. I'm gonna try to think of a way I can program that.
Yeah, yeah. And please bring this, to us. Email me. I would love to look at that. All right. Great. Thank you, Dmitry. That was great.
Thank you. Bye.
All right. Let's go to the next chart. Okay. So we have another exercise on synchronicity, and I'm thinking, why don't we do it next time? And why don't we, in this half hour that we have left, why don't we jump into the next exercise action sequence? So I'm gonna stop showing my screen for a second. Okay. Here we are. You should see my screen. If you don't, let me know. So here is our action sequence on price and volume exercise. And here, obviously, if you guys would like to volunteer, let's do that as well. So let me know. Let me know if you want to step in here. All right, let's go to Rick. No worries, Eric. Hi, Rick. How you doing?
Hello, can you hear me?
Yes. How you doing today?
Okay, good.
Yeah.
Uh,
All right, Rick, let's look at this chart. So this is the first chart of the action sequence exercise, that we're going to have. Somewhat of a recent IPO, I must say. We're starting at $14, and here is the action for the first maybe like 6 months or so, less so. Rick, how would we approach this? How would we analyze this? I mean, this is just a new stock that came to the market. What would be our assumption here as to the buyers, the next significant buyers?
well, I think I would look at the significant bars and the volume as we're going through this chart, and then go
Okay.
from there.
Okay, great. Well, walk us through this. I mean, up to the last bar, what is the story here?
I think I would. So we have a initial IPO, and it's a lot of volume and to the upside, and then yeah, that bar right. Then that bar looks like supply comes in and does a stop, and then we have reduced volume.
What does it
and
tell
then
us?
all of a sudden we've got.
Rick, what does it tell us about the supply? You said reduced volume. What does it tell us about the supply? Is supply increasing or decreasing?
I would say supply is decreasing.
Yeah, absolutely.
And
actually both.
Price is decreasing.
Yeah, and the price is decreasing. Supply is decreasing, so effort to the downside is decreasing. The price is decreasing as well. But the character of the price decrease, that we could observe is what, Rick? I mean, how does the price decline?
We got narrow spread, and it's just meandering on down.
Yes. So look at how through all of these three parts of the reaction, the spread is diminishing. So that's a bullish characteristic because it just basically tells us that there is less selling, there is less selling, there is less selling. Where was the most selling? Here and here. Then the most selling was on the next two bars, here. Then the most selling was on this bar. Then the most selling was on these bars. Then the most selling was somewhere here on these bars. And look how low of a selling this is. So it just basically tells us that I'm ready to go up, there is no selling, and then it jumps. Okay, Rick, let me ask you this question. So if I would look at the whole chart and I would try to create some kind of picture for a composite man's actions, composite operator actions, you kind of alluded to the fact that the price went up here on the volume increase. So I would think that this is institutional buying right off the gate. Then what is this then?
I would agree.
What is the next chunk
That
of
is
volume signal?
That would be some, I think that's more value buying
Okay,
again.
some more buying, maybe even trend following buying, it breaks out of the trading range, but we have institutional buying here, and we have institutional buying here. What does it tell you, Rick, about their buying? I mean, they're not waiting for a prolonged trading range. They're just buying on the way up. So what does it tell you about their buying?
That means they're trying to get in, and they're trying to get in fast.
Yeah, so
And
mhm.
so they're accumulating.
Yeah, so there is an
Yes, yeah,
accumulation
exactly.
on the way up. There is some urgency behind this buying, so they want to get into this position. They don't want to even, to allow the trading range to unfold. Or maybe this is just the initial buying that has kind of like this, oh my gosh, this is such a hot IPO, so you gotta buy, you have to be in this IPO because initial move is gonna be there, and it is. Okay, great. So then we have this story for the first maybe 3 segments. 1, 2, and 3. Now I want to look at the next segment. The next segment looks like a trading range to me, which I'm going to divide into different portions as well. Here is a section number 1, and here is a section number 2. All right, so how would we characterize the whole trading range relative to what the price is doing and relative to what the volume signature is doing first?
All right. Well, I would say in section 1 that there is some accumulation on the way up. In section 2, I would say that institutions are inactive. They've got their position.
Okay, and I would probably say that throughout this whole area right here, they're becoming more and more inactive. They got into their position here, then some late institutions are getting on the way up. We could see that from the volume signature, but the major institutions got in on the first legs up. And then because there is a deterioration in the momentum, in the volume, in buying itself, we are expecting some kind of reaction. And we need to see on this reaction, what would the CO do? What would the actions of the CO? All right, well, here's the action of the CO. It's inactive. There is nothing that's going on there. So we know that long-term interests are in and they're not out, but there is some kind of deterioration because of their inactivity. What can we expect from here? If the CO is inactive, what would the price do?
Then I
Hold
think
on a
it
second.
might just continue.
Let me ask you in a different way. Hold on a second. This could be a good, learning moment.
Okay, go ahead.
Think
Yeah,
about
go ahead.
the cannon, right? And think about the cannonball, right? So first momentum to the upside. Where is that moment? It's right here and then here, right? So this is that momentum. This is where they're shooting it out. Then what happens? It goes up a little bit because momentum is still there, but momentum starts to deteriorate. Where is that moment? Right here. And then it starts to deteriorate, right? So it goes into like a trading range. Here is that moment right here. So what's the next kind of step here? If the CO is not going to step in and not going to have another cannon somewhere here at the higher price, where there is another, another cannon short. So if that's not going to happen, we're not going to have a reaccumulation. We're most likely just going to collapse if there is not enough strength here to support that. Mm-hmm.
Yeah, weekends are going to start capitulating.
Let me
Probably.
just explain. This is very important. So let me just kind of like try this again.
Right, thanks.
So Cannon, increase of the momentum, deterioration of the momentum, trading range, and here we're going to have either the support. So once the price starts to deteriorate, would we have another momentum here by institutional buying? So institutional buying. If they're there, this produces this short-term oversold condition, buying by institutions, momentum increase, and sustainability of the trend. We'll talk about this in different specials throughout this fall season. Another push, another cannon, deterioration of the momentum, trading range, deterioration of the price. Are they going to buy it or not? Let's imagine they bought it again, but this time maybe was the cannon was not that great. The cannon was smaller. So the momentum brings us up to the new high, and then again there is a deterioration, trading range, and then finally there is no support, so the price is just going to collapse. What does it do? What's the most important here, the understanding is that that's what creates trends. Institutions create trends. They create trends by their buying. They are buying not always. They are buying at the most opportunistic times. They are buying in different ways. But in the trend, their buying is going to be, as in the trading range, in the areas of value. Those are going to be oversold conditions. As they buy, they bring a lot of volume signature. So that's what creates that push in the momentum, and the price usually starts, traveling faster. But then once they're done, momentum is going to fade, and conventional technical analysis is going to say like, okay, well, we're expecting some kind of reaction. We are thinking we're going to have a reaction. What kind of character of the reaction we're going to have? Are we going to have a trading range, deterioration of price, recovery, or is it going to be a downtrend? This is like the basic concept of how the trends are created and how the trends are being sustained throughout the whole price cycle. Okay. All right. So, Rick, what are we expecting here then? We are kind of in that price cycle. We are here. We are in this trading range, and then there is like this short-term deterioration. So our question here: would we go up or would we collapse?
Well, it looks like that's a pretty significant gap down, and we've got a supply tail and lots of volume, and so I would say we're headed lower.
Okay. Let's ask the class really quickly. What do you guys think? Where are we going from this? We're at a very, very interesting spot here. There's a lot of bullish characteristics.
It did hold support there, so it did not break lower. It held that support,
lower, but it could, right? So I'm just showing you the chart of where it
could.
Okay, let's just see what you guys are thinking. Dmitry is saying higher. Beginning of another cannonball higher happening, okay? Closed above its open. Yeah, I would say that this last bar actually looks somewhat bullish in a way of how the result is unfolding because it doesn't commit below 38. It has a lot of volume signature behind it, so there is some demand behind it for sure. Well, what else, guys? What do you guys think? I'm only seeing Dmitry answering. Okay. That's another good point here from Dmitry. Value zone for the CO potentially. Okay, so let's think about this. We had some supply here. We had some supply here. So most likely we are thinking about these two bars, and especially this first bar is our value zone. So we're thinking probably this is the zone where the price could potentially come back, you know, and they're going to have some buys again. So probably slightly below 34. So we still have some room. Okay, what else? No one else is answering. Okay, let's see, Rick, what's going to happen next. Here we go. So we were on this bar right here. Okay, well, interesting, right? We've talked about the value zone. So it went right into this value zone right here. We could be expecting some kind of reversal there. We did reverse. First question that I have is, what is the character of this down move?
I would say maybe just change of behavior.
Okay, from what
And
to
then,
what?
you know, and then we get to that, then we get that significant bar, and then we start going into higher lows.
Okay, so let's forget for now for the higher lows. Let's concentrate on the reaction itself.
Okay.
What is the character
Right.
of the reaction? So when we talk about the character, we want to look at the spread. We want to look at the volume
Spread's decreasing.
signature, and we want to look at the intention. Okay, so spread is decreasing, right? So look at this spread to the downside. I mean, is this an aggressive selling? Definitely not. Aggressive selling is this. This is the only aggressive selling that we see on this chart. Everything else, and this right here, everything else is kind of like mediocre. So therefore, we're thinking that yes, we are in the reaction, but this is a bullish kind of character reaction that we're seeing, which is very interesting. Okay, and we come into the value zone. So, you know, something. It's not like there are aggressive buyers here, but there is some demand that is smaller demand that comes in and produces some kind of stopping action. And then this bar that Rick has mentioned, this big up bar, it's not like it has a big volume signature. I mean, look at this volume signature. It's so dismal, but it produces a really good result and then commits above the last, you know, 3 bars here. So this is an ease of movement type of bar where we have diminishing effort characteristics, but yet increasing result characteristics. And that suggests that there is some kind of change of behavior that is happening. Okay, great. So now, Rick, now that we had this change of behavior and we have higher highs, higher lows, as you've mentioned, what about the overall picture? I mean, are we still in a bullish pattern long term or in the bearish pattern?
I think we're still bullish.
Okay, well, long term, look at this. Higher lows, right? And a higher high. So we are in the definition of an uptrend. We are in the short term, in the intermediate term, we are probably in the trading range, and short term, we are in the upswing. So this is where we are, long-term uptrend, intermediate trading range, short-term upswing. Let's look at the intermediate a little bit better. Let's look at the trading range itself. What are the boundaries of the range? How would you draw the boundaries of the range, Rick?
probably buying Climax on November 13th, or
Yeah,
you
I
know that.
would do the same.
Yeah.
Okay,
Okay.
what's next?
And
If
then
this is the buying climax, then
and then
this one.
the the automatic reaction,
Okay, and then this high.
secondary test.
Okay.
Yep, secondary test, and phase A.
Yeah.
Yeah.
So here are our boundaries
Yep.
for the range. Phase A, B, B, and I would even look at this maybe even slightly differently, but that's fine. You know, let's just go with this labeling, and then we'll look at the alternative labeling. Okay, so then what is this low then?
That would be test number 2.
Okay, so first test comes in phase A. Second test comes in phase B. So there are 2 tests that we have here. Number 2. So this seems like maybe like test number 3. Could be a potential
Yeah.
C, but we have to think
Yes.
about what's going to happen next year, short term. So from this picture, Rick, now we have to define, are we going down from here? And if we do, then this is not phase C, or are we going up from here? Then this could be a potential phase C. Could we decipher from this latest April-May price action what this is?
It looks to me that it's going to come and maybe test that 34 level because there's lots of demand tails and a higher low, and then we've got some strength there with those push to commit to the upside above what 38, I guess, that local high. And so I would say maybe back up to 34 and then make a commitment to the upside.
Okay, great. So to the upside, what else is important here for us to see with all of these bars? Is of movement suggesting that the selling, is exhausted. We kind of see this from the spread to the downside. First attempt to commit to the upside has that supply characteristic, and it takes us down. It takes us down like this, but it doesn't produce a low low. It's actually producing a higher low. So next time something like this comes, we have to pay attention to this level. Could we overcome the level of supply at 34, 36, when in the middle of April, we had a stop in action? Okay, well, next time it comes here, and we could see that, wow, the effort has the same type of signature. The result has the same type of signature where there is an attempt to break out, volume is expanding, and then there is a reaction to the downside. So this is a very interesting spot. Rick, I wonder if we could together kind of like decipher this. Effort is increasing, and yet result is doing what? And effort to the downside, obviously. So result to the downside is doing what?
It's decreasing.
Is decreasing, yes, because we would have to commit below this support level in order for us to say that emergent supply has actually the force behind it. And it doesn't. Even the bar that has this tail, the close of this bar suggests that we've come back to the value zone really quickly. And that tells us that no matter how much effort has come, demand was of such good quality that it absorbed all of the supply at this point. To confirm that, we need to see what happens next. And we see that the test is horizontal, not vertical, and it doesn't go anywhere, and it creates another higher low on the diminished volume characteristic. So this makes a lot of sense. Now the most important thing comes. how do we define that maybe next time when this happens? Because Rick has said that the price should go to 34, create another higher low, and then break out. So at this point, somewhere here, we're going to have a repeat of this action. But we need to look at the third time when it happened and kind of decide whether supply is increasing or supply is decreasing and being absorbed. So what do you think, Rick? At the third instance, do we have a much easier absorption of the supply or harder?
Easier absorption of the supply.
Okay, why is that?
Because in instance number 2, we had the bar closed pretty much at the lower end of the range, and also in
Which bar? Rick,
instance
it's
1.
really important. Which bar are you talking
So
about?
the big red bar,
Big
big
red
red bar,
bar,
number
okay.
2.
Mm-hmm.
Yeah. So it's closed. Yeah. And also on number 1, it did the same. But on number 3, we have narrow ranges,
Yes.
and we have a little bit of demand that's kind of hanging there, maybe.
Okay, I like
but
all
not
of
much
this.
volume, I see.
I like all
Okay.
of this. Yes, I like all of this. Look at 2 and 3. Volume signature is the same, yet the close is higher. The close is higher than number 1 as well. So number 3 already, the analog bar to the breakout bar has a better result. And it has it on the same effort signature. So it's more bullish as a breakout than number 2 or number 1. And then what Rick has mentioned about the supply, because supply comes at each point, 1 and 2, and the supply comes again at 3, but it doesn't have a very strong supply signature like at number 2, and also price-wise, result-wise, this is the most muted reaction. So it tells us that demand absorbs the supply better. It also tells us that supply has diminished significantly, and it also tells us that now result is more bullish. So we could expect that synchronicity is going to increase, meaning that there's going to be more demand coming in, and the result of that is going to expand, right? So more demand, expansion of the result. What price action could we expect, Rick, just based on that? If demand is going to increase and the result is going to increase, yeah. So we're going to have first rally. Yeah. We're going to have probably a better rally than we had here or here. I'm not sure about this, but probably much better than these two. That most likely will bring us back to the higher target. So target number 1 somewhere here. That's going to have some kind of momentum characteristics when, supply clears completely. So maybe in this area right here, we're going to have some increase of the momentum. Where do you think supply is going to come? Where are we going to have resistance on the way up?
We'll have resistance at 52 and at like 56 to 58.
Okay, and why is that?
Well, because we'll be at 52, we'll be coming up to that level where we had the gap down.
Yes.
So that's definitely a resistance level. And then we've got that little trading range back in December of 2018. So, from so which I guess the high was about 58 or 56.
Okay, and a bunch of supply here, then this bar right here as well. So all of this is going to kind of produce that resistance cluster. Yeah, I would agree. Anything above 40, there's going to be some kind of hesitation, but probably to 48, 46, 48, there might be, a better move first and then just kind of deterioration or some climactica, something like this, and then just some kind of deterioration here. So we'll have to look. We could have a trade here, which could be a very short term. So I'm just going through 40 would originate that trade. I think that we could even place the stop loss more aggressively, just because of how that supply has been absorbed and demand is present here. So if the price after the breakout comes back, I'm sure it's going to be picked up again by that demand. So let's just play that and let's see where it takes us. Okay, and this will be the last chart for today, but let's just see how the movement has started. So this was the bar that breaks the pattern that we are in currently. Look at how we are coming into the area where we had selling before. So let me just do this. Okay. Okay. So in all of these instances, we have some kind of stop in action. We have reactions and stop in actions just based on where supply has occurred before. This is, this analysis is a function of a horizontal volume signature. We're just looking at horizontal volume signature in a different way. So what we're doing is we're saying on the vertical volume, we see the spike. We want to see where that spike occurred on the chart, and we're going to say that this volume increase definitely has increase of the supply behind it. So whenever the price comes back to this level, we're going to have some kind of resistance, and we're going to expect that resistance from the supply. But the beautiful thing about this spot is it gives us a confirmation of the trend, whether the trend is still sustainable or whether the trend is not sustainable. So when we produce this type of reaction, we look at the volume signature, volume goes down, and then we look at the reaction itself within the trend line, same magnitude reaction as the previous reaction. There is no changes of character. Sustainable reaction. We're expecting a continuation to the upside. We're expecting resistance here. Next reaction, same way. Next reaction, where supply comes in. Naturally, we start thinking about the same spots where we tried to get out and where we had those spikes in the supply signature. So kind of the same. And we're thinking the same way. Supply occurs. We know it had occurred before, so it's natural for the supply to come again at this point. There is an emotional memory to the market participants that they have. And it looks climactic, so a lot of even smart hands are going to sell into that strength. But we're going to test it, and what is the test showing us? It's very successful. It stays above, and the price continues to the upside. So there is that sustainability of the trend.
So, Rick, what do you think?
All right, Rick, I'm going to disturb you for one more second, and then we'll finish this. Okay, so we are committing to the upside here, and this is where we're going to start next week. I want you guys to think about this chart, maybe as a homework, just kind of like do your analysis and tell me what is the next potential bias that we could have here for this stock. Rick, really good work.
Awesome. Thank you, sir. I enjoyed it.
Yes, and I'll talk to you next week. Let's quickly go through some of the homeworks. So optional homework, just for us to stay on the same page next week, analyze this particular slide. Let me jump. I'm gonna stop showing my screen for a second. All right, then next optional homework, I want you to go through this analysis again and just to think about the synchronicity and how it develops. Synchronicity does not occur right away. Synchronicity is going to be developed because there is a lot of force in the current trend that we usually have, like an uptrend here, and it requires time, to stop this trend first, and then to develop the synchronicity of price moving together with the effort. So I just want you to kind of refresh this in your memory. And then obviously anatomy of the trading range, of the trade, I'm sorry. Here, we have that trade, so think about, how that trade could develop. And then the bias game. Yes, the bias game. All right, and these are the assignments for next week. Good class, a lot of material today. So I'm really pleased that we were extremely active and we went through a lot of material. So really good work. The questions that you guys send are phenomenal. Keep sending me those because there is a lot of truth as we go through the answers. We're kind of uncovering a lot of great things. So keep doing that. I'll see you next week, or some of you I'll see you tomorrow at the WMD. And don't forget about October special, starts on Thursday at 3 p.m. All right, guys, I'll see you then. Thank you, and bye-bye.